This is Eric Muathe, Muathe.com. Early trading for January 29th, 2020. Markets called up. Here we've been trading for about 30 minutes. Let's take a look at the small time frame charts to see what they look like and what they're telling us. So let's begin here with let's begin with the VIX. So right now, take a quick look at the VIX. VIX trading at about 1620. All right. So let's take a look here, and we'll see that there's a line that I can draw that is suggesting to me that the VIX could actually find stability around here, which is based on the prior line if I draw it like this. Now remember, we're only using the RSI in this example, something like that. And here we had moved above this line, the recent 2 hourly, or by the way, this is a 2 hourly chart, hence the small time frame look. And this RSI movement led to this VIX spike. That was 2 days ago, and now we've already bounced on this over the last 2 days. So if we see the VIX coil up, in other words, if the VIX finds support around that blue line and looks to point higher, chances are this is where we see the VIX start gaining momentum in the short term for a move higher. Now this would coincide with the S&P 500 in the following sense. If you take a look now, remember we're only using the RSI to come to a conclusion. If we take this line here and extend it, we see that when the market was down on Monday, today being a Wednesday, this was where the RSI broke down. So essentially what we've done is we are coming back to the underside of this line. We've bounced on it once, failed, and now it looks like if it turns into resistance and starts pointing down, then this is where, from a swing trade perspective, you'd want to take a short position lasting a couple of hours, maybe a day or two, pointing down, based on the fact that as long as the RSI is being rejected right here on the back test of that blue line, then this market looks like it might want to pull back. Again, this is just a study of how you can use the RSI to trade the small time frame. Oh, by the way, if that VIX finds support, and let's not forget that we have a flat 50-day moving average, or generally flat, and we also came off a flat 200-day moving average. Now I have a method, I'm going to link it in the description of this video, based on flat moving averages, which I call the Muathe Virgin breakout. Very powerful for timing very small time frame moves. In other words, if you're looking for a day-to-day possibility of a spike, it's a very good move, especially when you have flat moving averages. So what I would say is very simple. This is the recent daily closing high, and that is at 18.23. So what I'm going to say is we can use that as the next breakout level for the VIX. If the VIX can clear that level, that would suggest that the general market is going to be under strong downside pressure. I can guarantee you that. So if the VIX turns around and eventually can move above 18.23, given that we have flat moving averages, be on the look for a massive market momentum move to the downside. Again, it would need a breakout above 18.23, and this is based on the method which I call the Muathe Virgin breakout. This is Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESPXS.